Hello everyone. In the previous session, as I recall, we discussed basic earnings per share concept. In this session, I will be solving with you 3 to 4 questions on the concept of basic earnings per share. So I hope you guys remember the concept that basic earnings per share equals to net income after tax minus preferred stock dividend divided by weighted average number of shares outstanding. Equity shares or common shares as we call them outstanding. For preferred stock dividend, if it is cumulative preferred stock, the dividend has to be deducted each year, regardless of whether it has been declared or not. And we ignore any actual dividends paid. For non-cumulative preferred stock, dividend, if not declared in any particular year, will lapse. So let's look at your first question. Question number 1 says, Balm Company had 100,000 shares of common stock outstanding as of January 1. So there is a company called as Balm Company. They had 100,000 shares outstanding as of January 1. Following events occurred during the year. 4-1 means in US accounting, month is written first. Indian students, you can consider it 1st of April. So on 1st of April, they issued 30,000 shares of common stock. On 6-1, again 1st of June, they issued 36,000 shares of common stock in the market. On 1st of July, 7-1, because month is written first, it's month, date, and year in the US format. So on 1st of July, they declared a 5% stock dividend. Remember, I told you yesterday, stock dividend, stock split, bonus shares, they are all treated as if they were done at the beginning of earliest period presented. On 1st of September, you have purchased treasury shares, buyback, 35,000 shares of your own equity stock, that is common stock. BAM uses the cost method to account for treasury stock. You can account for treasury stock using cost method or any other method, but that has no relevance in EPS calculation. So it has nothing to do with EPS calculation, irrelevant. What is weighted average number of common stock outstanding at December 31? I'm preparing a table for those of you who get accustomed with it. You don't need to. So date, particulars, weight or proportion assigned, and then weighted average shares. So on 1st of Jan, they had 100,000, that is 1 lakh shares outstanding. Now these shares were outstanding for the entire year, for the entire 12 months. So they should be given a weight of 12 by 12. 1 lakh. On 1st of April, they issued 30,000 more shares. Now these shares were outstanding for only April, May, June, July, August, September, October, November, December. 9 months. So they were outstanding for only 9 months out of the entire year. So company would have had an opportunity to earn money on these shares also for only 9 months. So weight will be given 9 by 12. That is 30,000 into 9 divided by 12. 22,500. On 1st of July or June, sorry, 1st of June, they issued 36,000 shares further. So these were outstanding for June, July, August, September, October, November, December. 7 out of the 12 months. So company would have had an opportunity to make money on these shares only for 7 months. So weight will be accordingly 7 by 12, 21,000. Now next what I see is a stock dividend. I told you yesterday or in the previous session that whenever there is a stock dividend, you just total the weighted average shares before it and then you give the effect. So I can total it. So total number of shares outstanding will be 1 lakh plus 30 plus 36. So yes, total number of shares that will be outstanding is 1,66,000. But for the purposes of EPS, weighted average shares is 1 lakh plus 22,500 plus 21,000. That is 1,43,500. That is the total number of shares that is outstanding for the purposes of EPS. Now I had told you guys that just give effect to the stock dividend here. So theoretically stock dividend 5%. This means 5% shares were given free of cost on the number of shares outstanding. So actual number of shares that would have been given is 1,66,000 were outstanding. Everybody would have got 5 shares free for every 100 shares held. But in my weighted average calculation, it will be 1,43,500 into 5%, 7,175. I am trying to show you both the calculations. One, only from the point of view of EPS, that is in the last column. And one, from the point of view that what is the total number of shares outstanding that will go to the balance sheet. So in EPS calculation, only 7,175 will be considered. I told you, just total the shares held previously and then give the effect on that stock dividend, stock split. It will always work. But in total, 1,66,000 shares were outstanding. So 5% of that would have to be given effect. Then on 1st of September, you repurchased, that is buyback. How many shares? 35,000. Now these shares were bought back on 1st September, means they were outstanding for what, 8 months of the year, January to August. They were only not outstanding for 4 months, September, October, November, December. So this is 35,000 into 4 divided by 12. Now, of course, this is a subtraction because these shares are not outstanding in the hands of shareholders anymore. They are held by the company in their own name. So 35,000 into 4 divided by 12. That makes it 11,667. So again, I am doing a total. So total number of shares outstanding will be 1,66,000 plus 5% bonus, and that minus 35. So total number of shares, these many are outstanding. 1,39,300. this is relevant for balance sheet. For EPS calculation, it will be 1,43,500 plus 7,175 minus 11,667. That is 139,008. This is your answer for the purposes of EPS. This is the total number of shares that is outstanding in the balance sheet. So answer is B. So always remember that is why we use the term weighted average, because we have to give them appropriate weights in proportion to the number of months they were outstanding. Now the thing is, stock dividend or stock split, reverse stock split or bonus shares, these are for the purposes of EPS assumed to be issued at the beginning of earliest period presented. In this case, it will be always assumed to be there since 1st of Jan. So I had told you yesterday also that just do a total of the number of shares weighted average. This is the important column, the last one. Second column is anyways irrelevant. I've just shown you for calculation. So just do a total 1,43,500 before it and give the effect. The answer will always be correct, no exception. Question number 2. UT company had the following capital structure during year 1 and year 2. So UT company is there and they had the following capital structure during year 1 and year 2. Preferred stock 10 par value, 4% cumulative, 25,000 shares issued and outstanding, $250,000. That means 25,000 preference stock, which are cumulative in nature, of face value or par value $10 each. 4% means the preferred stock or preference stock, as it is called in India, preferred stock dividend will be $250,000 into 4%. That is $10,000. This is the amount of dividend. And because the shares are cumulative, I will deduct it regardless of whether it has been declared or not. Common stock, 5 par. So common stock face value is $5 each. 2 lakh shares are issued and outstanding. Total face value is $10 lakh. The company reported net income of $5 lakh for the year ended December 31, year 2. So the company, that is UT, reported profit after tax of $5 lakh for second year, December 31. They paid no preferred dividends during year 1. So year 1, they paid nothing and paid $16,000 in preferred dividends during year 2. So year 1 they paid nothing, year 2 they paid total 16. Still it is less, right? Because 10 plus 10 becomes 20. But we don't care in case of cumulative what is the actual dividend declared or paid. We only look at what should have been 10,000. In its December 31 year 2 income statement, what should be reported as basic earnings per share? So the formula for basic EPS, that is net income minus preferred stock dividend. And you divide it by weighted average number of common stocks outstanding. Now in this question, net income has been given for year 2, that is $500. Because it is cumulative, I have to take each year's due dividend every year, 10,000. I will ignore the actual dividend paid. And they have not told that shares were issued during the year or something. They are just telling common stocks, 5 par 2 lakhs. So means this many shares must have been outstanding throughout the year. So divided by 2 lakh shares. So that becomes 4 lakh 90 divided by 2 lakh shares. That is your 2.45 per share. This is your basic EPS. Option B. This is the correct answer. Last question for the day. Question number 3. Next questions are for dilutive. We will solve it after I teach diluted earnings per share. Net profit for the year 2001, 18 lakhs. Net profit for the year 2002, 60 lakh rupees. Number of equity shares outstanding until 30th September, 20 lakhs. Bonus issue happened 1st October 2002. 2 equity shares for each equity share outstanding at 30th September 2. Calculate basic earnings per share. So in this case, again, there is no preferred stock dividend. Number of equity stocks immediately before bonus. That is 20 lakhs. It says for each share that you are holding, I will give you 2 bonus shares. That is what they are telling. Now, bonus issue 1st October 2002 was 2 equity shares for each equity share outstanding. So, bonus shares. It will be 2 for 1. So, for every 1 share outstanding, you will get 2 new shares. So, for 20 lakh shares outstanding, you will get 40 lakh shares. And because this is bonus shares, the weight will be assumed that this was always assumed to happen. So the entire weight 12 by 12 bonus shares always get full weight. You never prorate. In question 1 also, see, I did not prorate the bonus shares at all, because if you are assuming that these were always outstanding, how can you do prorata or assign weights? Not at all. So 20 lakh full, 40 lakhs full, 60 lakh shares were fully outstanding. Basic EPS, preference stock dividend, is not there. So you have 60 lakh, that is your profit, and you divide it by number of shares, 60 lakh. That becomes 1 per share. So this is it, guys, in this session where I solved some multiple choice questions and some other question on basic earnings per share. In the next session, I plan to discuss on diluted earnings per share and then also solve MCQs on it or questions on it. Till then, have a good day, everyone. Thank you.